For the last 15 years, I've been on a quest to discover the DNA of the most successful digital leaders in the world. What makes them tick, what's in their minds and in their hearts. We are sharing deep insights from our world-class CIOs so that you get inspired, can learn and reach your full potential as a digital leader. If you are an ambitious technology executive, then I invite you to join CIONET. Join our community so that you too can realize your ambition.
Good morning, good afternoon, good evening, wherever you are in the world. My name is Mark Zawacki, and welcome to another edition of CIONET Spotlight, where, as you know, each week we put a digital leader somewhere in the world in the proverbial spotlight. And today I'm delighted to be joined by Dominic Venturo, and Dominic is the Chief Digital Officer at US Bank. US Bank is one of the top 5 banks in the United States. It goes back to the 1860s or something, and it's about $500 billion in assets, roughly, as of around 2020. I think last year is around $500 billion. Nationwide, with some international operations, a typical large complex bank with retail operations and obviously enterprise and corporate customers and all different types of arcane financial services. So, Dominic, you're pretty easy to introduce. In a 30-year career, you've had worked for 2 companies. You started out at Bank of America, and then you transitioned over to US Bank, but only two employers, it looks like. And obviously within that, you've had a few dozen roles in those companies. Prior to being the Chief Digital Officer at US Bank, you were for nearly 15 years the Chief Innovation Officer, and we're going to unpack a lot of that too, the relationship between digital and innovation, et cetera. So what did I leave off in that introduction?
Hey, Mark, thanks for the opportunity, and everybody, thanks for checking in with us. I guess from the introduction perspective, you're right. 2 main company names. I think the banking industry has been lots of mergers and acquisitions, so there's actually probably a number of different entities that have sort of rolled up into those names over the years. I think the big thing from if you think about background that might be relevant to this group, right? One is I've been a career product person, but before that, I actually started out on the sales side and on the relationship management side, so working directly with customers. That really helped me understand sort of how customers do business with the company that I'm working for at the time, right? But then I moved into product management, and from there, I spent time in both operations and technology. And working within a technology shop that is a service provider to others, it was really important bit of element into the experience, because one, thinking about how to build things that can be scalable in multiple different kinds of technologies and or leverage points could use. And 2, understanding that the way companies then reconfigure things to deliver products to their customers, really, really interesting perspective. So those are a couple things that I guess I'd point out for this audience that I think are pretty relevant.
So you went from customer facing in a sales role to product, innovation and digital, obviously with a big technology slant in there. So you've kind of seen, many different facets of the bank. Let's start with that, that customer perspective. Are banks, how are banks thinking about customer experience? It's not about the technology, it's about delivering a customer experience. Everyone's running around with an Android or iPhone. They have a heightened expectation of a digital experience, and by and large, they're hoping their bank keeps up. How do banks think about that in 2021, particularly over the last 18 months, and what the world's been through? Customer expectations are shifting dramatically. How do banks respond to that or keep up?
Yeah, I think, Mark, when you think about the change in customer experience, There's a couple lenses on that. One of which is, the pace of change accelerated pretty radically because it had to. And we saw adoption of products and services, features, and the like that consumers and users might not have been as comfortable with, right? Using digital assistants or voice assistants, for example, doing video chat. I think if we tried to introduce video chat like we have in co-browse in our mobile app 2 years ago, we would have had customers running for the hills, right? Because that would have been just a weird thing to do, and why would I do that? But the reality is we've seen massive uptake, and part of it is because the world changed and people started using different technology differently, just like we are now, right? So we're doing video conferences like we never have before. It becomes second nature. I think the other piece is the self-service and assistance side hasn't changed as much as you might think it would. It's been enabled by technology, but from a comfort and from a information sharing and a confidence perspective, we see customers still valuing human interaction and the assistance that they can get from a trusted advisor. And then lastly, I want to talk about how we think about customer experience. One is to sort of look at what's happening and how people are behaving, which of course we do. We're obsessive about that and looking at the metrics and the monitoring and the feedback. But the other is actually doing the direct customer research, right? Watching them use not just your products and services, but other products and services, observing, asking, using things like ethnographic research to dig deeper into what's actually happening behind the scenes. What are you thinking? What are you worried about while you're doing this? What concerns you? Is it security? Is it assurance that it's going to happen? And the like, and then using that to inform your product design.
And so I just want to wind back. You said, I'm in a mobile app. This is, over the last 18 months and customer experience has changed, but I'm in the US Bank mobile app and I can invoke a call center and I literally have a live chat if I've got an issue, if I've got
That's right.
An issue, a problem can't solve. Couldn't have done that more than 18 months ago without COVID, without those shifts. Probably would have been difficult to roll out without a known use case. But given the demand was up on the app, people just started naturally using that and getting comfortable with it. That was the takeaway?
The takeaway is yes, absolutely. As individuals, right, began using digital devices for more things, then the extension of that to more features within banking felt, I think, more natural. So you get good uptake. So we could do co-browse, see the customer's mobile device and point them to what button to push and the like, right? That's one. We do that in a safe and secure way. We also have the ability to do video chat. So to be able to actually see the person that you're talking with while you're doing a customer support interaction or a sales piece, not unlike what you might do in a Zoom or video chat, but actually doing that from inside the mobile app, which has really been seeing strong take up.
Builds empathy, builds rapport, you get that connection, etc.
Yes, exactly. All those things.
In my intro, I said you were head of innovation for 15 years, and then you've transitioned to digital. How do you sew those two pieces up? What's kind of the difference between the two? What's the demarcation? You had a very long time in that innovation role, and you switch over to digital. But how do you hold those two differently? A lot of people think them in some ways as somewhat similar.
Yeah, well, I mean, I think a lot of times innovation converges into digital. But the actual thinking about the innovation group, and I was there for a long time, and we sort of changed the way we do things within that group 3 or 4 times over that period. We started out really working and focusing predominantly on payments, and then we expanded and said, well, how could we enable this for other products and services? And then we began looking more broadly at emerging technology and research and development, and then applying that to product development, which is where we are today. And so think of the innovation group now as both a leading indicator to where customer behaviors are changing in an enabled way, but also leveraging applied research and development to test and prove out promising technologies that might make their way into the mainstream. And I'll just give you a quick example. A few years ago, with an innovation, we started working on APIs, application programming interfaces, and building out a developer portal. And we built some APIs and we started doing hackathons, not so much for the hackathon's sake, but so that we could get real user feedback from the developer community and improve the way that we do APIs and the documentation and the like. And now that's actually a business, if you will, within the bank, where we have a developer portal, we have a developer community, we have companies that are building products and services connecting securely to our APIs. And it started out as the idea of connecting this, sort of RESTful API to the outside world is a bit scary and new, and a lot of banks aren't doing it. So that's an example of R&D to product development through the roadmap.
On that, you go to business executives that don't understand technology, and you start explaining RESTful APIs, and we're going to expose data to people we don't know, developers we don't know what their intent could be. There's going to be a lot of immediate questions about, security and cyber and regulatory environment. How did that go? How do you unpack that for us a little bit?
Yeah, well, so you're right. Every one of those things happened. So this is one of those things where I think communication and explanation is very important. When you're actually talking to other business executives, you're not going to say you're going to go use RESTful APIs, right? But what we are going to say is that we're going to build a portal where software developers who we approve and we risk manage and we manage the way that those work will be able to connect to the systems that we want them to be able to connect to in a safe and secure way. And then they will be able to enable our customers to use their products in a different way. And then we can talk about how do we manage the risk? How do we think about the business? Is it service oriented? Is it revenue generating and the like? But I think the big thing is, being able to sort of explain the complex or the technical in these are the things that people will be able to do when we do this. And this is the way that we will manage that, can be a helpful way of bridging that gap between technical mumbo jumbo, right? And the what do I need to know and how do I need to think about it?
And turning those into benefits, and here's how the bank's going to benefit. Now, it reminds me, it's been trendy over the last 5 or 7 years for not only banks, but a lot of other businesses to say, hey, we're not a bank. We're actually a technology company that happens to offer financial services. Did US Bank go down that path, and did executives kind of internalize that, like we really are a technology company that happens to provide financial services? And does that then change their posture or profile towards, being more open-minded on these kinds of topics?
I think so. I'd probably spin that a little bit different way, Mark. I think, I would say we absolutely are a bank, and that the marketplace and the enablement and the way that we build has evolved to support all of the digital capabilities that we can avail ourselves of to help our customers do business with us better. I think, if you lose sight of the fact of what you actually are and say, well, we're a technology company, I think most technology companies don't think of themselves as technology companies. They think of themselves as a communications platform or a social media platform or an advertising platform or what have you. So we're actually, we are a bank. We take deposits, we lend money, we do payments, we do all those things very well and many more. But we also have had to compete with the world's leading technology focused companies in the hiring and building out design and developer talent and being able to keep the environment, the tools, the capabilities, and the programs motivating for those folks to want to work for you. I would say a couple of years ago, it was more of a disconnect to folks that would be coming out of sort of the technology industry to consider working for the big banks. But the reality is the big banks are investing a lot of money in these platforms and capabilities. And You have the tools, the investment, the infrastructure, and the support to be successful. And so we're seeing a lot of interest as a result, which is awesome.
That's great. You'd mentioned earlier payments in your innovation capacity, and let's discuss that. We've seen a payments industry, a payments startup industry, for at least 20 years, and it seems to be still very frothy. It's we just had in the U.S. venture community a record Q2. The Q2 numbers came out, and it was just extraordinary, the amount of money being invested in venture capital, and highlighted in that was payments. And so and I haven't really unpacked this report yet that just came out last week, CB Insights, but I'm just curious why after 20 years payments is still thousands of companies all over the world. And are they fragmented, or are they solving big problems that haven't been solved yet, or a combination of both? And is it the sheer complexity that we really don't have kind of a template to think about it? But somebody who's not actively in the payment space every day, I'm just curious on why it's still this enormous sector, but it's been around for 20 years. It's kind of a natural in venture to have something so frothy still after 20 years.
Yeah, Mark, and so let's unpack that just a little bit, because there's a few themes that are happening there, especially if you look at the 20-year horizon. So I'll focus sort of on the most recent, like 5 years. A lot of and part of this is U.S. and then part of this is global. But if you look at what's been happening in the last 5 to 7 years, we've seen a lot of convergence of commerce to digital, right? So the ability to do things like order ahead, pick up, and the like, which massively accelerated in the last 18 to 24 months. But a lot of what was happening is businesses were saying, I need to be able to get to a bigger audience. I need to get to a bigger customer base. I need to be able to market my product online, and then I need to be able to solve that. Well, that created some new business opportunities, one of which was how to be able to accept payments securely and manage all the associated risk and the like. But then the other side of it was, how do I manage my supply chain? And how do I manage the shipping and the logistics? And how do I manage the payment for all of those things, which created B2B or commerce opportunities in the business space. And guess what? Businesses popped up to solve those unique problems. Some of them were entirely in the freight and logistics space. Some of them were entirely in the e-commerce enablement space or the wallet enablement space. And then we began to see some consolidation of those things happening as the market sort of grew and matured. So that's one bit of trend that was happening. And by the way, part of it was enabled by a consumer device change, right? Which is the mobile devices began to have secure elements in them, or enclaves, where the payment credentials could be stored. Applications could have embedded payments put into them to manage the payments securely. And then apps could be created to enable the commerce to happen and the payment to happen. So we saw massive convergence of payments from that side of things on the consumer to the business, order ahead payment and the like. Now, the other piece that's happened, especially in the U.S. most recently, is the advent of real-time payments, which is a new payment rail in the United States, created by the Clearinghouse, which is an entity that U.S. Bank is an investor in, along with a number of other banks. And this real-time payment system uses modern technology, part one, a standard format, and then part two, the remittance data, or all of the payment metadata, can go along with the actual payment for the business. So why do businesses care about this? Well, today they get they mail invoices, and then they get payments back. And when they get the payments back, sometimes it's a check, which we've joked about before, Mark. But sometimes it's a check, and then it includes the remittance data that says, I'm paying for these 9 of 12 things on this thing, which is why my check is a different amount than the invoice that you sent me, right? That process then needs to be reconciled. It needs to be all that. In the real-time payments environment, you actually can do all of that electronically. Send the invoice electronically, send the payment for a different amount, include in the message the remittance data, do the reconciliation, the adjustment, book it to the ERP system, and move on. That's a massive advancement. And now we're seeing a lot of companies begin to spin up enabling capabilities for those. So we saw that in person-to-person payments a decade ago. We saw that then accelerate. We saw the consumer adoption for commerce. We saw that accelerate. And now we're seeing in the B2B space the emergence of real-time payments. And the point is, each one of those was a very large, sort of intractable problem that needed specialized solutions. And so you saw a lot of investment go into the space to begin to solve those things over that pattern.
Got it. And you said a new set of rails effectively. Does that mean ACH is going to decline over time, or is this additional demand being fulfilled on this new set of rails, or does it ultimately mean the decline of ACH longer term?
Well, it's certainly competitive to ACH from the perspective of it does some things better / differently, right? The remittance data can go along with the payment, which is good. It's real-time payments. It's guaranteed good funds, whereas ACH is delayed and the like, and doesn't have the remittance data. So it has some different characteristics. So that's one piece. But the other part is the real big target is check and paper. Because we still see a very large percentage of business-to-business remittances happening through check and paper, and that's got back office implications. It had remote work processing implications in the last 18 months that now businesses have said, well, it wasn't a problem I needed to worry about before, but now it's a problem I'd like to solve. So we're seeing more interest there as an event. And I think it will make a meaningful dent in checks and paper for sure. I think it will be competitive to ACH, especially when speed and remittance data matter. But I also expect you'll see ACH continue to coexist, just like we've seen checks coexist for longer than they arguably should have.
Checks, and I know we talked about this before, but CIONET historically, we started in Europe. We have a lot of senior banking executives in Europe that listen to this podcast, to the CIONET Spotlight series, and they're always perplexed with checks. They're like, gee, it must not be a robust banking system or up to date or up to speed or digital if it still uses checks. But I think there's two alternative views to that. One is it works cost effectively, it works. And then the second is there's never been a mandate senior enough or coordinated enough or penalty, a charge to say we're going to do away with a paper-based checking system. Does that kind of summarize why the U.S. still uses checks, and it's probably the only developed country in the world that does?
Yeah, I mean, I think those are the big things. You've got the competitive solutions from a technology perspective exist. So but without a mandate and or without business incentive for businesses to change the way that they do business, it's difficult to say, well, we're going to take this thing away from you, because there was no mandate to do it. So the banks obviously continue to provide that service. We do see check volume declining, but yeah, we certainly still have them, and there are definitely solutions that could replace what you do with a check today that hopefully will get some strong uptake as we move forward.
The technology alternatives are there, and on a company by company basis, they're going to make a business case to say it makes sense for us to become checkless, and over the next 5 to 10 years, you'll just presumably see more uptake on an individual basis as companies decide that it just makes the ROI is there for them to do away with check processing.
Yes, for sure.
It sounds like that'll be the way forward.
Yeah,
so
I think so.
You've had many different roles, but I also think you're a technologist, but all that time in innovation, you're a bit of a futurist. Without divulging, U.S. bank secrets or strategies, what are the big technologies you're tracking right now over a 3 to 5 year window? What's really going to change the shape of banking from a digital perspective? Is it AI? Is it ML? Is it robotics? Is it customer experience, which is really a technology? It's technology enabled. But what are the things that you really believe are going to change the face of banking as we know it?
I mean, I think, you touched on some of the enabling technologies. I think, as we look into the future and we think about customer interactions, I mean, one of them is the power of data. One of the challenges with data is it requires an awful lot of it in order to be able to do intelligent inferences and or see trends, and to have a whole bunch of data that you're processing without a intent is very expensive. The cost is coming down, but it's still very expensive. So what we're seeing now is, as we get better at both harnessing the data and then the power of the data, we can deliver some really interesting new experiences that begin to add value in different ways. And I'll just give you a tiny example, but data is one of the big trends. I'm sure I'm not the only person to say data is the new oil or whatever phrase you want to use. But, a good example is that if we have a customer who's done business with us for a few months and we see enough of their behavior and they have established a goal, savings goal. Let's say the goal is, it's summer, so I want to buy a boat. We can help the customer by giving them a machine learning driven insight that says this month you spent less than you normally do, and I understand all of the bills that you have to pay, and you have a savings goal of this, so you should pay yourself first this additional amount of money towards your savings goal so you'll get there faster. And we can do that every month, and we can do that for microtransactions. And the power of that is the power of savings and accumulating money into your savings account, right? It's a snowball effect. And so that's a very powerful sort of tool that's machine learning driven insight that enables, I think it's not obvious to a lot of people, but when I say this, you'll say, oh, I've done this, which is you look at the amount of money that you have in your account, you look at what you're trying to save for, and you think, oh, I should move some money to savings. And then you move less than you think you actually should because you think, well, I should leave a little buffer in there just in case. And so the whole goal here is to help consumers realize those goals faster and to give them support in making, that kind of a decision. So data is a big one.
Go ahead.
Oh, I'm just going to, one other sort of, I think, big trend, which is part of that, is sort of automation. And that is this idea of, as we learn more about through our systems, your behavior and the preferences that you have, and you as an individual get more confident in trusting those solutions, then turning over the reins to enable some things to happen automatically, right, with your permission is really empowering. And this isn't auto bill pay, which is, a dumb system that simply makes a payment on a date for an amount. This is actually saying, I can pay a little bit more on your mortgage this month, which is the most optimal place to put incremental money if you have a little bit extra to invest, that type of thing.
Right. I'm smiling at your earlier example because when you're talking to a banking executive like yourself in the Twin Cities in the middle of the summer, you get a boating case study. So that's very Twin Cities for people listening, right? Everyone's boating this summer on the Mississippi.
10,000 lakes.
Yep. I've done it myself. 30 minutes goes quick, Dominic, and we're just about out of time. And as you know, I always close with the same question. And the question is, what's the one thing, what's the one tool, the one method, the one process, the one insight, but what's the thing that Dominic has in his toolkit as a digital leader that you can pull out and use? And sometimes your staff and your team knows you're going to use it, but it just gets you results. And I want you to share that with all of our other listeners today as something that they can also add, potentially to their toolkit.
I think the big one for me is understanding why it is that we're trying to do something. And for the folks that are working on it or proposing whatever it may be, if they can deeply explain why it is, what is the problem that they're trying to solve, I've found that you get to much better outcomes. And often you find that there are things that folks are recommending because others are doing it, they're seeing it over here and the like, but without actually understanding the why, you could decide to do things or invest in things that could be very expensive mistakes. So that's a pretty common thing, which is understanding the why. What was the research that led us to the conclusion that we need to do this thing?
I have a slight follow-up on that. That's an interesting insight, and we've all been in those conversations. When you start discussing that why, there's always debate, right? And does that debate ever lead to kind of reorientation of the initiative or the project, or is there any leeway there to say, gee, when we look at the why, actually there might be a better why, so therefore we're going to move 3 degrees and head slightly in a different direction? Do you ever use that as a process to kind of refine the why?
Sure. There's also a research technique, which is the 5 whys that you're probably familiar with, right? Which is really digging underneath the problem when folks are articulating something that they don't necessarily truly understand why they do things. That's sort of a different but related topic. I think, yeah, the whole point of asking that and understanding it is to understand if the recommendation or the path forward will actually get you the results that you expect to get. And if you have a group that are of experts that are looking at things from different perspectives, so think diversity both in professional experience as well as background, and they're all looking at the same why explanation and the recommendation, you will have a much better outcome than if you have, go present to this one executive who's the decision maker and see if you can get them to agree with you. That I think is would be my secondary piece of advice, which is, really use diversity of experts and background to be able to see if those solutions actually resonate in a way that you might move forward.
That's wonderful. As I said, 30 minutes goes very quick. Dominic, on behalf of CIONET, thank you so much for your time today. Really appreciate it. Wonderful insights. And thanks again. Enjoy the rest of your week.
Thanks, Mark. I appreciate it very much. Thanks, everybody.
Great. Thanks. I'll see you next same time next week.